Welcome back to Investment Edge, where we explore the world of money, wealth, and the strategies behind successful investing. Today, we're diving into one of the most powerful systems ever created by humanity, the banking system. We'll uncover the fascinating history of banking, where it all began, why banks were created in the first place, and how they evolved into the institutions we rely on today. We'll also take a closer look at the first banks in the world and in the United States, and finally, explore the ranking of the top US banks today. If you've ever wondered who created banks, and why, then stick around, because this story goes back thousands of years and directly connects to how our investments and financial systems operate today. The origins of banking and how it all began. To truly understand banking, we need to go back to ancient times. The concept of banking didn't start with modern glass towers or Wall Street, it started with temples and merchants in Mesopotamia around 2000 BC. Back then, people deposited grain, livestock, or silver with trusted temple priests, who acted as the first bankers. These temples provided safety for valuable goods, because temples were sacred and heavily guarded. Over time, priests began lending grain or silver with interest, marking the beginning of the lending business. The system spread. In ancient Greece, moneylenders sat in marketplaces offering loans. In Rome, bankers, known as argentarii, accepted deposits, transferred money, and even financed trade. After the fall of Rome, banking faded in Europe during the Middle Ages, but it returned during the Renaissance with Italian merchant families. One of the most famous? The Medici family of Florence. In the 14th and 15th centuries, the Medicis created one of the most powerful banking systems in history. They introduced the idea of double-entry bookkeeping, the foundation of modern accounting, and financed kings, popes, and international trade. So, in short, banking was created because people needed safety, trust, and a system to lend and borrow money to grow economies. The first real bank as we think of it today was the Banca Monte dei Paschi di Siena, founded in Italy in 1472. Amazingly, it's still operating today, making it the oldest surviving bank in the world. But another giant milestone came in 1609 with the Bank of Amsterdam. This was the first institution to truly resemble a modern central bank, providing a stable currency and supporting international trade. Amsterdam became a global trade hub thanks to this system. By the 17th century, banking expanded in Europe with the founding of the Bank of England in 1694. This was revolutionary because it wasn't just a commercial bank, it also became the central bank of the British government, financing wars and issuing banknotes. This model became the blueprint for central banking worldwide. Now let's cross the ocean. In America, the first chartered bank was the Bank of North America, founded in 1781 in Philadelphia. It was established to help finance the Revolutionary War and to stabilize the young nation's economy. Shortly after, in 1791, the first Bank of the United States was created, championed by Alexander Hamilton, the first Secretary of the Treasury. Hamilton believed the U.S. needed a strong central financial institution to manage debt, create currency, and support commerce. Not everyone agreed. Thomas Jefferson and others feared a centralized bank would give too much power to wealthy elites. This debate between federal control and states' rights became a recurring theme in U.S. banking history. The Second Bank of the United States came in 1816, but like the first, it eventually expired due to political opposition. It wasn't until 1913, with the creation of the Federal Reserve System, that America finally had a stable, permanent central banking system. The Federal Reserve, or simply the Fed, remains the backbone of U.S. monetary policy today. When we talk about the history of banking, one fascinating chapter often overlooked is the role of goldsmiths in 17th century England. At that time, wealthy individuals deposited their gold with goldsmiths for safekeeping, since goldsmiths already had secure vaults. In return, depositors received paper receipts. Soon, people began trading those receipts instead of withdrawing gold each time, because the paper was lighter, faster, and more convenient. These paper notes became the direct ancestors of the banknotes we use today, showing how innovation often emerges from practicality. As banking matured, crises also shaped its evolution. For example, in the United States, the Panic of 1907 revealed the dangers of a fragmented financial system without a central authority. Banks collapsed, markets plunged, and it was only through the personal intervention of JPMorgan, who gathered bankers in his library and forced them to coordinate a rescue, that the system was stabilized. This moment proved the need for a permanent central bank, and just 6 years later, in 1913, the Federal Reserve System was born. Likewise, during the Great Depression of the 1930s, thousands of banks failed, wiping out the savings of millions of Americans. To restore confidence, the government created the Federal Deposit Insurance Corporation, FDIC, in 1933, which insured deposits and rebuilt public trust. These events remind us that banking has always evolved in response to crisis and necessity. For investors, banks are more than vaults and loans, they are the engines that drive economic growth. Every loan a bank gives, whether to a family buying a home or a company expanding its operations, creates ripples that affect jobs, innovation, and stock markets. When banks are lending freely, economies grow. When banks tighten their lending standards, recessions often follow. Investors pay close attention to how banks are performing because they act as leading indicators for the overall economy. Banks also power wealth-building tools such as retirement accounts, mortgages, brokerage services, and even small business loans, making them essential to both individual and national prosperity. While the United States banking system has its unique history, it's worth noting that banking is a global phenomenon. Switzerland, for example, became famous for its private banks that offered secrecy and wealth management for the world's elite. In Asia, cities like Hong Kong and Singapore emerged as powerful banking hubs, linking East and West in global finance. In Europe, the creation of the European Central Bank allowed over 20 nations to share a single currency, the euro, and coordinate monetary policy. These examples show that while each nation's banking history is unique, the need for trust, safety, and credit is universal. Fast forward to today, and the U.S. banking industry is dominated by giants with trillions of dollars in assets. JPMorgan Chase sits at the top, with over $4 trillion in assets, followed closely by Bank of America and Wells Fargo. Citigroup remains a global powerhouse, and U.S. Bancorp is a rising star in both retail and commercial banking. Beyond these top 5, other names like PNC Financial, Truist, Goldman Sachs, Morgan Stanley, and Capital One round out the top 10, each specializing in different areas such as investment banking, wealth management, or credit cards. Together, these banks are not just financial institutions, they are ecosystems that influence markets, politics, and even global stability. Another modern twist in the story is the rise of digital banking and fintech. Companies like PayPal, Chime, and SoFi are reshaping the way people interact with money, offering mobile-first platforms and services without physical branches. Cryptocurrencies and decentralized finance, or DeFi, are challenging traditional banking by enabling peer-to-peer transactions without middlemen. Yet, despite these innovations, traditional banks remain deeply embedded in the economy because they provide the infrastructure for lending, government bonds, and monetary policy. The banking system may look different in the future, but its core role in providing trust and stability is unlikely to disappear. What began thousands of years ago with sacks of grain stored in Mesopotamian temples has transformed into trillion-dollar banks, mobile apps, and even cryptocurrencies. The journey from clay tablets to digital ledgers is not just a story of finance, it's the story of human civilization. Banking has always been about creating trust, managing risk, and fueling growth, and it remains the backbone of modern capitalism. Why were banks created in the first place? Safety was first. People needed a secure place to store wealth. Lending and growth, banks loan money to businesses and individuals, fueling trade, innovation, and economic growth. Trust and currency, by holding deposits and issuing notes, banks became trusted intermediaries, replacing barter with organized systems of money. Without banks, economies would struggle to grow because there would be no reliable way to fund big projects, from railroads to technology companies. Simply put, banking created the foundation for modern capitalism. The biggest banks in the US today. Now that we know where banks came from, let's fast forward to today. The US banking system has grown into a global powerhouse, with institutions managing trillions of dollars. Here are the top 5 largest banks in the United States by assets. 2025, JPMorgan Chase & Amp Company, over $4 trillion in assets. The largest bank in the US and one of the most powerful in the world. Bank of America, around $3 trillion in assets. Strong in consumer banking and wealth management. Wells Fargo, over $1.7 trillion in assets. Known for retail banking with branches across the nation. Citigroup, Citi, around $1.7 trillion in assets. Famous for global reach and investment banking. US Bancorp, US Bank, over $650 billion in assets. A rising player in commercial and retail banking. These banks are not just financial institutions, they're massive ecosystems, influencing global markets, investments, and even politics. When these banks sneeze, the entire economy catches a cold. Think about it, humanity went from storing bags of grain in temples to digital banking apps where millions of dollars move with a single tap on your phone. Banking has always been about one thing: trust. From ancient priests in Mesopotamia to the Medici bankers in Florence. From Alexander Hamilton's vision of a national bank to today's trillion-dollar giants like JPMorgan, the story of banking is the story of how humans built trust, scaled economies, and created the financial systems that power our investments today. And that wraps up today's journey into the history of banking. Hopefully, you now understand not just when banks were created, but why they exist and how they evolved into the giants we see today. Here at Investment Edge, we believe that understanding the history of money is one of the best tools for making smart investments. Because when you know where the financial system came from, you can better predict where it's headed. If you found this video helpful, make sure to like, subscribe, and hit the notification bell so you never miss our deep dives into the world of money and investing. Drop a comment below. Do you trust the modern banking system, or do you think it's due for a major change? Thanks for watching, and remember, on Investment Edge, knowledge is your greatest asset.